Hey guys, it's me again, coming to you from, you guessed it, my desk. Man, with all the COVID restrictions that we're running into, we've decided not to do any farm update meetings this year in person. Some folks are happy about that, some folks are not. We may try to do another meeting closer to, after everything's laid by or something, just to get together. But for now, we felt like this was the safest way to do it. So here goes. Here's your 2021 crop insurance update. So several things have changed. We're becoming a little more tech savvy, if that's a word you can use for me. I have a great helper here. My brother-in-law is really good at this, and he's behind the cameras. You can't see him, but he's not a lot to look at anyway, so you're not missing much. So we're going to jump right in. Today's February 1st. We've been tracking our prices now since the middle of January. So we've got a good feel for what everything's going to look like. What you're going to see this year is a little different than what you've been seeing in the past. So when you would come to a crop insurance update meeting, we would give you a full slide presentation. I would go over everything. You take that book home with you. A little different this year. In the next week, you're going to be getting this same presentation in paper form by region. So you'll be able to follow along with everything that you see me do in this presentation. Also, there will be a link on the YouTube channel that any of your friends or neighbors that aren't customers of ours, if they would like to look at this book, look at our slides, look at the information we're giving out, you can point them to that page. They can print their own book out. If you lose your book, you can print you another one. So, I've not been a fan of YouTube, but guys, to see this, you're going to have to go to YouTube. It's real easy to find. If I can do it, you can do it. Probably a caveman can do it. Type in YouTube in your browser, and it comes up. Type O'Brien Agra Group. You'll see all the videos there. If you'll hit that red subscribe button, every time I put up a new video, you'll get a ding on your phone. I'll try to send out text messages to let you know when we do a new video, but that's the easiest way. And hey, another thing in 2021, we've been hesitant to do a website because most of you guys don't like going to a website, but such is the nature of COVID. So a new website's coming online here in just a week or so, o'briengroup.com. It'll have a little information about us, information about changes with the program. All these videos will be linked there, so good resource. You're actually going to have Amanda do some videos as well, so good place to be, good place to stay caught up, and we'll be giving you more information out about that. When you get this booklet in the mail, really nice, pretty spiral-bound book, just like we do with the map books that you guys like so much. In that same package, Amanda is working up quotes for every one of you guys based on your history, based on the level of coverage you've got. I believe she'll run a level above and a level below, so you can see what the changes are based on what we think the prices are right now. Because remember, prices going to calculate through the 14th of February. So we're halfway. So we got a good feel for it. I'll give you an update on the prices as we go through this. So fixing to jump in and start this thing. Here's what I'm going to talk about today. Here's your 2021 crop insurance update. I'm going to talk about the claims update. I'm going to give you some information there. Cottonseed endorsement, the SE coverage, the replant option on cotton, beans, or corn, mainly cotton for most of you guys. Big topic of discussion, HIP. The Hurricane Indemnity Program / WI, which stands for Wind Index. So HIP with WI, paid out tons of it this time. Some people love it. Some people wish it had paid one county further. So I'm going to give you an update on that, give you my opinions on that, and then hail and wind. A lot of guys this year had some great hail and wind claims, had a lot of damage though, but how hail and wind works in conjunction with your regular crop insurance and with HIP. So just to kind of give you an overview of how I see that and give you some food for thought as you're choosing what you're going to take level-wise in 2021. So starting with claims update. Guys, you know that Amanda and I every year open up a claim for you toward harvest time. So generally about October. The reason we do that is 15 days post-harvest, if you have not given us notice, you have a delayed claim notice, which makes it harder to get paid. A delayed claim takes 60 days. So from time you give notice or from time we give notice, if you hadn't got your settlement sheets or the adjuster hasn't finished it in 60 days, it's a delayed claim. So what we want to do every year, and this has not changed, what we want to do every year is give notice on your behalf early in the year so that we don't get into a delayed claim situation. I take the burden off you, Amanda takes the burden off you, we put it on the company and adjuster because there's a chance you might have a claim. Maybe a pound claim or maybe a revenue claim. But we want to go ahead and give notice early so you're in the pipeline for the claim, everything's setting on ready. Been doing that for several years. So here's the thing, guys. When the adjuster calls and he says, hey, Mr. Farmer, Eric and Amanda turned in a claim notice on your peanuts. Your response should be, I'm still picking, don't know if I'm gonna have a claim or not, just wanna be on the safe side, okay? So you go along with us in that because it solves a lot of problems later on. We don't wanna get in a situation where we can't pay you a claim. Outstanding premium. Man, I wish we didn't have to deal with this year, but here we are. Still a lot of claims in the pipeline. 27 years of doing this is the hardest claim season we have ever had, bar none. Claims everywhere, problems everywhere, delays everywhere. My theory is a lot of these people that normally are working are sitting at home on a couch, working remotely, eating Cheetos on the couch and not doing crop insurance. That's not me, I don't like Cheetos. But somebody down the line is doing that. That's why everything's taking so long this year. And most of that's on a federal level. But anyway, if you've got a claim pending, right, it hasn't been paid, you haven't got your check yet, and you still have a crop insurance premium, I'm sorry to say you've got to go ahead and pay that crop insurance premium. Even though the company may owe you money, you've got to pay that premium or you're going to have a payment plan and arrangements made by February 28th. All right. So for instance, the company's you're going to have a $25,000 cotton claim and you owe $5,000 on your crop insurance premium. Guys, you got to go get with your banker. You got to go ahead and get that settled up before that claim is worked. You don't want those two checks to cross in the mail, right? Because if you don't have it paid, it kicks you out of the system, the crop insurance program, for a year, and you can't get back in. So your lender's depending on you having crop insurance. Hey, I'm depending on you having crop insurance. We don't want that to be a problem. Amanda and Lacey will try to keep you up to date. But if you think it's going to be close on that claim being finalized, whether it's the fault of the gin or you just got through picking late or there's just a lot of claims ahead of you, don't risk that because there's nothing I can do to help. So if you've got an outstanding premium, it's got to be paid before February 28th, even though the claim may be coming. High dollar claims, man. I've had a few of these over the years. I can't tell you how many I've had this year, probably 30. Anytime a claim exceeds $200,000 per crop per county, you're going to get a high dollar review. So I help with those. Amanda helps with those. We help the adjusters get all the information. We run right through those. Sometimes you may not even know one's being done, and so we're kind of behind the scenes working on that. That delays the claim process a little bit, and so there's been a lot of those. One thing that they're doing this year that I'm kind of maybe iffy about is they have what's called a finish team. And what that means is if your local adjuster comes out and you've picked everything and we're just waiting on a settlement sheet, somebody else will take that gin report or that peanut production and put it on paper, send it to you to sign digitally, and it makes the claim come back a whole lot quicker. We've had a few problems with that this year. There's been a few technical difficulties. The main problem with it is this. There's so much quality adjustment this year being done on cotton. Currently, bale by bale by bale by bale, we have to enter that manual, or the adjuster has to enter that manual. So it's taken a lot of time. These claims are 50, 60, 70 pages long, depending on how many bales of cotton you've got. So something we're working through, 2021 claim season. So this upcoming fall, that will be done a little bit differently. But hey, man, we're still dragging 2020 at this point. So if you're in question as to whether you've got a premium, if you're in question as to whether the premium's been credited, the claim's been credited to your premium, call me, call Amanda. You've got our cell numbers. They're on the front of the booklet. None of that's changed. Stay in touch with us. Let us know. There's no room for error here. Okay, so claim update. If you are not finished with your claims by the time you're watching this, call me. Call Amanda. Let us know where the adjuster's at. Let us know where you're at. Everything should be classed by now, or pretty much everything. So if you're not through, if you haven't settled that claim, call us and let's make sure that somewhere in the cyber world, it's not crossed up somewhere. We'll check that for you, make sure that we're on the right page to get that finished. So jumping in now to cotton, there's not a lot of changes in the 2021 program. And so Amanda and I thought it would be good to give you our opinion, right? And so we've never been guilty of not giving you our opinion, but here it is. So how do we build a perfect cotton policy for 2021, knowing what just happened in 2020? So here goes. I'm gonna jump in with both feet. We want RP coverage. Every one of you that's watching this is an existing customer. You already have RP. RP is the old CRC. It's the revenue-based program where if the price of cotton falls, you're going to have conceivably more pounds of coverage and still have a claim. If the price of cotton goes up at harvest time and you pick short, you're going to get paid at a higher price. Right now, as of today, cotton's tracking about 78 cents. 18 out of 20 years, cotton's worth less at harvest time than it is this time of year. So kind of a no-brainer. I'm going with RP if it's my cotton crop. If you're in Alabama or Georgia, I've added SE. Well, Florida too. So I've added seed endorsement to my cotton. So what does seed endorsement do? If you pick short of your original pound guarantee, then we're going to add between 10.5 and 11 cents a pound more to your claim. So if you're at 78 cent base price going in or discovery price going in on cotton, and we add another 10 cent to it, now you're 88 cent, right? 88.5 cent, 89 cent, depending, and it varies a little by state. Your state's in this booklet, you can see what it is. So basically here it is in a nutshell. If you pick short of your pound guarantee, we're adding another dime or a little bit more per pound for what your claim would be. Okay, so if you've got 100,000 pounds of guarantee, you pick 90,000, you're 10,000 pounds short, but instead of it being at 78 cents, it's gonna be at 88 cents or 89 cents, depending on which state you're in. HIP, HIP, Hurricane Indemnity Program / WI Wind Index, $6.5 million paid out just through our agency this year alone. West Alabama, the Sally Storm, Mid-Alabama, the Zeta Storm. You'll see which counties paid. I'll get into that a little more in a minute. Would I take HIP? Yes, I would take HIP, definitely. And here's the reason. HIP is so cheap, and it fills a niche that no other crop insurance mirrors exactly. Okay, so with HIP, if you get a Cat 1 storm in your county or the adjoining county, you're going to get the payment. Whether you have a claim on your regular insurance, whether you have a claim on your wind, all of that is irrelevant. If you get the storm from the time you plant to the end of the insurance period, you're going to automatically get the payment, full payment. You can participate at different rates. I'll get into that in just a minute in a little more detail. Hail and wind is needed. Guys, currently I'm writing more hail and wind on cotton than anybody in the Southeast. Why? Because I'm a believer in it. I've seen years where we would have a lot higher yield going, a lot more cotton in the field than we typically would have in our history, in our database. You know, I may be averaging 750 pounds over the years, but I've got, 1,250, 1,300 pound cotton made. Get a bad storm come through, get a hurricane come through, half of that blow out, and you're still picking enough cotton that you don't have a regular crop insurance claim. But with hail and wind, it's what percent blows out, less the deductible is the payable claim. So most of you guys have got that already. So again, what does the perfect, in my opinion, what does the perfect cotton policy look like? RP, seed endorsement, HIP, and hail as needed. Hail is not right for everybody, or hail and wind is not right for everybody, but it is right in a lot of circumstances. So as you're working through this book with me, the next page is going to be SE. In Alabama, it's going to add 10.5 cents to a pound to your deficiency. Florida's 10.9, Georgia's 11.2. You ask me why those are different. I tell you, I have no clue. That's the way the Fed's printed. You have state factors that go along with the price. That's what it's going to come up to be. Some crop insurance agents tell you it's a little different than that, but they failed to put the state factor in there. So that is what it's going to pay. The premiums are going to vary a little bit depending on what level of coverage you're on your regular insurance. Amanda's got those figured. I've got you some generic ones figured in this book that you're going to be looking at, but also remember your individual quotes are going to be in the same packet that you're going to get here in about a week. So SE, Replant. I said Replant was a critical part, in my opinion, in Alabama and Georgia of the cotton crop. So, with regular crop insurance, there's no replant on cotton. But with SE, it's a supplementary policy that we take. And so what all the guys have done so far is we take a $40 policy. So $40 an acre for replant for any reason. Deer get in it, drowns out, you dust it in. We get in a bad drought situation, you dust it in and get a couple tenths and have to replant, spot plant, whatever the case may be. $40 an acre back to you for any reason that you've got to replant. It's going to run you about $2.50 an acre. Replant is also available on corn and beans. You can see there's no sense in that because we all know that the regular federal crop insurance policy covers replant with corn and beans. It does, but this covers it in addition to it. So why would I say consider this? Well, here's the reason. If you're an irrigated producer and your own cat, let's say on your irrigated crops, there's no replant. Okay, so we can take a supplementary policy. If you've got a corn set up under a cat, then you need some replant on it. Well, if you get too much rain, right? Yeah, we won't get it up if it's under a pivot because I've got water. But what if you get too much? So that's not right for everybody, but the replant focus, our focus is on cotton. However, if you're that irrigated producer with beans or corn, consider it as well. Because if you're on a low level, you don't have any with the regular policy. Covers all the same perils as the policy. Self-certification replant, I really like this part. This is going to be true for peanuts, cotton replant, or any other replant. Because of COVID, it's 100 acres self-certification replant. So if you have less than 100 acres, the adjuster's not even going to have to come out. We're just going to take your word for it. He'll help you do the paperwork. Now, if you have a replant of any kind, call me before you do it. Call Amanda before you do it. 100 acres of self-certification replant, just like it was last year. If you're adding SE to your policy, February 28th is the date that you need to know about. It's the date you need to remember. The next page, page 7 there, is going to have you some prices on soybeans, corn, and cotton. On SE, self-explanatory. You don't need me for that. Hail and wind. Guys, I would have been a losing betting man if I had bet that the hail and wind premium was going to increase this year. I cannot believe it didn't. Books are printed. Alabama, Baldwin, Mobile counties, 550, 100, just like it was. Coffee, Conecuh, Covington, Escambia, Geneva, and Houston, 350, just like it was last year. All other counties in Alabama, so from there north, 225, 100. So for every $100 worth of coverage those guys buy, it costs $2.25. Florida, across the board, doesn't matter to me which county you're in. All of my cotton counties, they're across the panhandle, $5, 100, there's no difference. So if you took $200 worth of coverage, obviously it's $10 an acre. $300 worth of coverage, $15 an acre. So it's easy, no changes there. Coverage till December 1. Hail and wind is fall bill premium on page 9 now. Fall bill premium, same way it's always been. Does it pay in addition to your regular insurance? Absolutely, just like it always has. 10% deductible. One thing that's a pain in the hind end is that it bills out separately. So you get a bill for your hail and wind policy, you get a bill for your regular policy. So a little bit aggravating every year when everybody's trying to settle up. There's no difference. Quick example there on the bottom of page 9. It's about how much cotton blows out. What percent of my crop is removed from the stalk? If I've got 800-pound cotton in field number 1 and 50% of it blows out, my claim is going to be the same thing as farm number 2 if 50% of it blows out and it was 1,000-pound cotton. It's what percent blows out. Pounds never come into play. So my example, this is the easiest one to remember. If 60% blows out due to a storm, there's a 10% deductible. So 60% blew out, don't matter how many pounds are there. What percent blew out, 60% blew out, 10% deductible, 50% payable claim. 60 blew out, 10% deductible, 50% payable claim. We say, well, 50% of what? 50% of how many dollars you bought. If I bought a $300 policy and I've got a 50% payable claim, $150 an acre. If I bought a $100 policy, 60% blew out, 50% payable claim, I've got a $50 an acre claim. I can break the amount of coverage you choose in $25 increments. You could take $100 worth of coverage, $125, $175, $250, any $25 increment I can break the hail and wind in. It goes till December 1st. You've got the rates for Alabama and Florida. There's no change there. Hurricane Indemnity Program. Either you love it or you hate it. I was apprehensive because this was the first year we had it. I was pleased with how it worked out. I wish it had gone a little further to get some adjoining counties. The guys that really needed it to, but based off NOAA's data, and this is where they said that the storms ended. You see copies of that in your handout here. First key thing about HIP, I'll just refer to it as HIP. You've got to have a Cat 1 sustained storm at 74 miles an hour or higher. Tropical storm come in and it's 73 miles an hour. Guess what? You get zero. Only Cat 1 sustained winds in your county. Gusts don't count. They're looking at it on NOAA's wind field. They're tracking this every 3 hours. It's pretty exact as to where it goes. What I saw as both storms were coming in this year, just watching on the Weather Channel, which is not official, where I saw both storms die as a hurricane corresponded exactly with what NOAA came out with, which is in essence what federal crop paid. But that's key. Gusts don't count. Sustained winds. And so, as that thing comes in off the Gulf, you've got a wind field that looks like this, and then as it goes north, that wind field shrinks. And so it touches less counties, obviously. So you've got examples of how it worked 2 times in 2020 that you can fall back on. For what it cost, I think it's a great idea. Along the Gulf Coast, it's pretty expensive, but as you go and get up into the Black Belt, you're looking at a couple bucks an acre with $175 an acre paybacks. So, I think it's a great thing. You have coverage. You got elected by February 28th. It's a change from last year, right? Because we could do it out into April. February 28th, if we're going to increase it, decrease it, or do away with it, got to do it by February 28th. Coverage on this starts when you get the crop planted, okay? And it goes until the end of the insurance period for that crop. So cotton goes all the way to 12/31, corn to 12/10, peanuts to November 30th, soybeans to December 10th. The typical hurricane season is over at the end of November. So from the time we've got seed in the ground, plant date, all the way to the end of the insurance period, you choose how much participation of HIP that you choose to participate in. If you take 100% of HIP, obviously it's more expensive than if you take 33% of HIP. Page 11 and 12, you'll see the Sally storm, you'll see the Zeta storm. The green counties physically received Cat 1 winds. The pink or the coral colored, I can't say that, counties, they were the adjoining counties. So if your county gets Cat 1 sustained winds, every county that touches you also gets the payment. So the county that gets it plus one more is the easiest way I know to explain it. So page 13, I gave you a quick example just to kind of show you what participation looks like, show you how the HIP policy works. So I made this just a round number, okay? So let's say that you got a farm that has 1,000-pound cotton average on it, right? You say, well, mine's 600 or mine's 800. Don't matter, the principle's the same. 1,000 is just easy for my simple mind to figure with. So if I've got a farm number that has 1,000-pound average, and I'm on 70% level on my regular crop insurance, it means I got 700 pounds, right? So 70% of 1,000 pounds, 700 pounds. HIP, H-I-P, exists at 95% of the farm average. So HIP is between my crop insurance level. So if this is 70% right here, 700 pounds here, there's 250 pounds here, it gets me to 95% of my farm average. So if you're looking along on this sheet that I'm looking at, that you got 950 pounds as the top of the HIP coverage, it actually exists between 950 and 700. So HIP, in this case, in my example, is 250 pounds of cotton. So if you take 100% of the HIP coverage, you got 250 pounds of cotton at 78 cents a pound. Disclaimer, that's what it's running today. That's $195 worth of coverage or claim in this situation. So if you got the storm in this example, and you got the 74 plus mile an hour sustained, or you were in the adjoining county, crop insurance is writing you a check for $195 an acre. Okay, so that's at 100% participation. If you're in the Black Belt, you're talking about a couple dollars an acre. If you're on the coast, you're talking about $10, $12, $15 an acre. So not many people down a couple counties up of the Gulf are taking it at 100%. So you say, well, Eric, I can't do 100%. but I could do 75%. So 75% of the hip claim, remember there's 250 pounds possible. So if I went with 75% of hip, it paid me back 187 pounds at 78 cents, $146. So what if I took 50% of the hip? It pays back $97. 33% of the hip pays back $64. 25% of the hip pays back $50 or $48.75. So you decide how much participation that you want to put into your crop insurance plan. You can do 15%, 20%, 25%. I gave you some examples there, 25%, 33%, 50%, 70%, or 100%, just to kind of give you an idea of what's available and how it works. So whatever your crop insurance level is, HIP sets on top of that. If you're at 60% level on your regular crop insurance, then obviously 600 pounds to 950 in this example would have more dollars of coverage in HIP, right? So guys that are on lower levels of coverage, if you take HIP, it costs more, but you got a lot more dollars in your coverage level. So that's just a brief overview. If you have questions on that when you look over it, hey, call me. It's not changed from last year. That's just the easiest way that I know how to explain it, or that I have found to explain it. So 14, you're going to see some different prices for your local area. What do I do on my peanuts? I've had a change of heart on peanuts. I don't think you should take RP. There's examples in here as to why. There's not enough movement in the market. Figures right or down price and a bunch of other things that affect the peanut market. It never changes enough, guys. It just doesn't. So go with YP. YP has the same price per pound coverage that RP has, and RP is not going to help you because the price isn't going to move very much. Look back over 6 years, it only helped just a little tiny bit one time out of 6 years. So save $3 an acre and let's just keep it on YP. All you currently have it on YP right now anyway. No change there. Right now, the contract price that I'm hearing is about $475. So today, the base price is tracking at $418. Okay, so if you've got a contract that ends up more than $418, if you get us a copy of it, Amanda can tie your crop insurance to that higher price. So would you rather have your peanuts insured at $475 a ton or $418? That has to be signed. That peanut contract has to be signed by 7/15, by July 15th for us to use it. So if you sign one now, you're golden. But if you wait till August and hope for something better, you're welcome to sign it. I just can't tie your crop insurance to it. So remember, all these changes got to be made by February 28th this time. So here's the change that I've run into this year, how I've had a change of heart. I've been a big proponent year after year after year with enterprise units on most all of our crops because the cost savings was just tremendous. I do see some deficiencies though with peanuts, and here's one. Peanut insurance is not very expensive on optional coverage, where each farm stands independently. It is more expensive than enterprise, but it's still not crazy. So here's one thought I have as to why we might want to go to farm by farm coverage on our peanuts instead of enterprise, Seg 2s and Seg 3s. What I saw happen this year is a lot of, right after the storm, a lot of Seg 2s and Seg 3s, but the rest of the peanuts ended up being okay. So instead of having claims on those farms that had Seg 2s and Seg 3s, because it was enterprise, it all got lumped together and they didn't have a claim, right? Or quality adjustment helped, but not enough to have a claim. So I would strongly consider looking at YP coverage for sure, but compare optional coverage where it keeps farm numbers independently on your peanuts. Man, I don't know. There's some savings to be had with crop insurance by doing it the right way. I'm not sure that's something we want to cut. There's a lot of variables there, but I'm kind of thinking it's a pretty safe bet with my cotton, but I don't know that it is with peanuts. So 50-50 there. Depends on who you are, how you're set up. You're going to get the quote either way, so you can look at what Amanda thinks your coverages are going to be, what they're going to cost. Bust your irrigated and your non-irrigated. You can take one level on your irrigated peanuts, different level on your dry land. No change there. How do we build the perfect peanut policy? YP coverage on the type of coverage. Tie your contract in it. Take HIP. You say, well, why would I want to take HIP on my peanuts? Because hurricane ain't gonna hurt my peanuts. Exactly. Guys, the HIP program has nothing to do with if you have a claim or not. If you get the storm, you get the payment. It does not matter what happens in your field. You could have already finished picking your peanuts. A storm come in November and you're already through picking, you're still gonna get the payment. So if it happens from planting time to the end of the insurance period, you get a payment whether the crop's in the field or not. So YP plus contract plus HIP. Guys, example works the same way. I'm not even gonna run through it. If you take 100% in this peanut example of a 4,000 pound farm, it's $208 back to you. Doesn't matter what happens in your regular insurance. You take 50%, it's $104. You take 25%, it's $52. A lot of you guys took 33% last year, 33 to 50%. That's not a bad place to be. If you want more, well, here's how it works. If you got a claim on it last year, you know you want more. And if you didn't have a claim on it last year, you think you had too much. So however you want it is how we'll do it. We're here to help. We're just giving you our opinion. How do I build a perfect corn policy for 2021? Pretty simple, not gonna belabor it. RP on corn, right now we're tracking 478, I believe today, as of February 1. So I'm taking RP coverage, I'm taking HIP, and I'm gonna take hail on my corn in a lot of situations, guys, especially if you're an irrigated grower and all you're worried about your corn blowing down. We had a ton of corn blow down this time, and hail and wind coverage made a lot of difference. It's very reasonable. We can add that hail and wind coverage on out later than February 28th. So if that's something you're deciding about, want more information about, hail and wind on corn is kind of a new thing. Don't have it in Florida yet. Kind of hope we would. Georgia and Alabama, though, we have it. I'm separating my irrigated and dry land. So I've got a corn HIP example in here. I've got corn HIP premiums in here. And soybeans, man, almost identical to what we think on corn. RP plus HIP plus hail. And you say, well, I don't know about hail on my soybeans. Well, if you're an irrigated grower and all you're worried about is some problem with damage after the fact, storm coming in or something like that, hail and wind on beans. Not very many people are taking that, but if you have some irrigated beans, it's something to consider. So that's up to you. For 2020 COVID edition, we laughed about that last time I talked. Things have changed a lot. We like to sit down face to face, just like we have for the last 27 years. It's not always good for you. It doesn't matter to me. I've already had COVID. But it's not always good for you. It may not be good for your family. Guys, we can handle this with a phone call, but it's just different. I'm happy to sit down with you just like we always have, but times are different. We pray that everything at your house is the best that it can be. We've lost a lot of people we know to COVID. COVID was a lot harder on me than I thought it would be. I had it for 3 weeks, and then took probably another 3 weeks to a month to get over it and get back mentally to where I felt like I was prior to. So we're ready to sit down with you as soon as you're ready. We're ready to make changes. You may already have everything just like you want it. It's not a problem. Then we don't have to change anything. Everything carries over just like it did last year. We just need to talk briefly to make sure that everything's the way you want it. If you're incorporating, if you're starting an LLC, if you're starting a new partnership, I need to know that prior to February 28th so we can get you a policy in that name. Basically, that's the long and short of it. We thank you for your time. We thank you for your business. You mean a lot to us. And so if you're still watching this, there's going to be more videos coming. So stay tuned. Enjoy your book. Look through it. If you have questions, call us. Go through your quotes. You'll see a level above, level below. If you want to change a level, if we need to add anything. Hey, if you've changed spouses, I got to know that. Hopefully you hadn't. I hear that's expensive. I've had mine for a long time, and she says she's staying and I'm staying, so we're good. But I miss seeing you guys. I miss the fellowship. I miss getting together and eating and sharing how the year was. I hope 2021 is better. But I'm here, Amanda's here, Lacey's here. Guys, nothing's changed on our end. We still love you. We still care about you. And we're looking forward to 2021. We hope it's a lot better year. And so, I never know how to sign off. So I don't have a good sign off for you guys today. But if you need me, call me. And I really do appreciate you.